Bitcoin has broken above the major short-term $44,000 resistance, moving upwards as high as 45.8k. Can Bitcoin push a little higher towards the 46 to 48k resistance, or are we going to see a correction moving into the ETF news? Let's go ahead and dive in. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be discussing the short-term price action, the macro price action, and the upcoming ETF news. We're going to be going over the current price, the breakout of the 44.2k range, the high time frame resistance sitting at 46 to 48k, and possible price scenarios centered around the ETF decision. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant economic news. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. If you are interested in trading, you can join our VIP group. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and everything you need to trade the signals effectively. You also get access to our group chat community, which has access to our general chat, our trading chart and education chat, our help, our news, our daily video, our trade setup chat, and so much more, guys. If you're interested in joining over 600 members, contact me in the pinned comment of the free channel to find out more information. Let's go ahead and dive in. Now, this month is going to be a very busy and tricky month for the markets in terms of volatility, in terms of potential manipulation, and in terms of overall price action. I believe we're going to see a lot of chop. We're going to see a whole bunch of volatility. We're going to see a bunch of leverage trap set moving into the ETF decision and deadline, which is supposed to be on the 10th of January, which is around 1 week from now. We're going to discuss that more in today's video, but we'll start on the market data. So moving over to market data, 24-hour volume is up 65%. This is sitting at 144 billion coming out of the new year. Now in the first week of the new year, we are starting to see a bit of a surge in volume as Bitcoin breaks over that short-term resistance, that range high trigger we've been discussing for weeks now. We've said a break above this level will result in a continuation upwards, potentially to 46 to 48k. You can see we just came just shy of that 46k major high time frame resistance level. Moving over, back over here, looking at that 24-hour liquidation data, we can see a very even split between shorts and longs, leading us to believe that this move caught people off guard, 50-50. Some people were expecting a continuation upwards, some people weren't. We saw 50-50 split down the middle with those liquidations. Moving over to the volatility index, we can see on the 30 and 60 day, not too much change on the 60-day period, but the 30-day period should be starting to tick upwards very slightly now as Bitcoin breaks out of a 30-day long consolidation. Moving over to the 60 really quickly, we shouldn't see too much change over here on the 60. Let's go ahead and jump over, guys, to the DXY. The DXY has seen that bounce on that support level again. We did expect this level to be a support until it fails to be a support. Support is support until it is not, and we did expect a small bounce from here. However, the DXY is still in a downtrend while it remains underneath this downtrend diagonal resistance. So, meaning that while we remain underneath this downtrend diagonal resistance, the DXY is still very much going down. If we do break above this level, that will flip the DXY bullish on the short term and could actually provide some negative selling pressure for Bitcoin moving into a major high time frame resistance, and of course for the traditional asset market, S&P, the Nasdaq, all of those other ones, we could see some pullbacks across the board. However, that is not particularly likely until the DXY does break above this trend line. If it remains below this trend line, we could still see a correction down to 99 if that base low, that low of around 100.7, is of course taken out. However, it is looking relatively okay for a move back upwards. Looking at the S&P 500, we did see our weekly candle close just over 48k. However, we are now retesting this level as a level of support. This level between the 4,800 level and the $4,765 level. Again, this lower range of this resistance now being support is a bearish trigger, meaning if we lose this lower range, this orange line on that weekly chart, that is going to be a signal of a potential reversal developing, and we could see a correction back downwards to around 4,600 to retest this local high over here before the uptrend continues. So definitely watch out for that, as this could be, and it's not confirmed yet, but it could be marking deviation above the high as of right now. Moving over to the Dow Jones, looking a lot healthier on the higher time frame. However, we are starting to see these candles start to shrink. We're seeing longer bodies, longer wicks. We're seeing smaller bodies, more or less. This is a potential sign of exhaustion. Again, we are in this price discovery range now, which makes it very hard to really predict based on historical data where the Dow Jones is likely to go. But looking at current price action, this could be a sign of potential weekly exhaustion. Coupled with the fact we are at a whole number of 38,000, this is an area of psychological resistance, and thus this would be a particular area of interest where a reversal could develop from, which could take it back down to retest this area of support. Again, breaking through 38k, a clean break on the weekly will likely result in a continuation up to 39. Let's go ahead, guys, and summarize that and jump over to the ETF news, and we'll come back to the ETF news a little bit more in the video today, but I want to briefly touch on it. So again, the ETF news is expected to have the deadline around the 10th of January. Now, the specific time that news is going to be released is unknown. We don't know if it's going to be in the morning, at night, midday. It hasn't been announced, and it's very unlikely to be announced, as they want to reduce overall market manipulation as much as possible with these big events. But we already know that all the manipulation is set and planned and executed beforehand anyway, so it's really just not to give retail investors the upper hand. So they keep it random for that sake. So the 10th of January is supposed to be the deadline. Now, we are hearing potential signs that there may be a delay. If we go over to this news article here, we had a look at this one. They said they're facing a lot of pressure of all the paperwork, especially over the New Year period, moving into the 10th of January, to actually get it all set up and all ready to potentially approve. And this could be a narrative building that could set the tone for a potential delay, maybe a few weeks, maybe a month or two into this deadline. So definitely keep that in mind, guys. Just because the SEC has set as a deadline doesn't mean they're going to hold to that tooth and nail. They could definitely still change that. However, it would not be very nice to see. We definitely want to see this news get over and done with now. It's been very long in the tooth. They've been dragging it out for a very long time, and the market has very well gone upwards, but a lot of people are starting to get very restless and tired of constant delays, constant news, constant manipulation surrounding this ETF news already. So keep your eyes on that, guys. We'll discuss it in today's video, what impact the ETF news could have on the price action. We'll get into that in just a moment. Before we get into Bitcoin, guys, a quick word from Bitget and BingX, and we'll jump in. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay, guys, let's go over to Bitcoin, starting on the short-term price action. So what have we seen in the last couple hours? And yesterday we didn't do a video, so we've got a lot to talk about today. In the last 24 to 48 hours, we have seen everything we were looking for a break upwards. We were looking for three things. Specifically two things. The third thing was like the confirmation. We were looking for number one, a break above the RSI trend line. In fact, we saw that very early on. We actually saw this all the way down over here on this white line prior to the break upwards. Number two, we were looking for a break above the CVD horizontal neckline of resistance at around 17K. You can see on the CVD over here, and you can see that happen on the second, okay? The second white line. Now, if you do look at when these actually occurred, guys, you can see both of these actually occurred during and before the break of this horizontal range high trigger. We saw the momentum shift positive. We saw the price action push up as a positive shift of momentum, as we discussed in the prior video. Tells us there is now a significant shift, okay? A significant shift in buyers in comparison to total sellers or selling volume. So that actually pushes the momentum up, that pushes the volatility up, that pushes the overall CVD up, the cumulative volume delta up, and of course the RSI moves up as a consequence. Now we do know this is a derivative of price action, so we don't always see the price action match the RSI. It is not a reflection of the price, it is a derivative of the price. So we do generally see the RSI acting as a leading indicator to what the price action will likely do when we see a significant shift. The way I like to think of it is if we see 100 sellers, okay, and we see 100 buyers, and then all of a sudden the buyers jump up to 150 and the sellers drop down to 50, okay, we generally see a significant shift in overall momentum and volatility. And if that shift is great enough, large enough of a shift, the shift is likely to have an extended consequence on future price action, and thus we can treat the RSI as a leading indicator for what buyers and sellers are likely to do in the next period. Once the next period comes along over here, we saw in the prior period we had a significant shift. What does that translate to in the next period? Well, guess what? It tells us that buyers are gaining strength and will continue to gain strength. So that is how we use RSI for those of you who don't know. Just a very quick visual, or I don't know if you call that a visual example, but whatever it is, hope it's helpful. So moving over to the price action now, we've seen the break above the 44.2K resistance, a phenomenal level of resistance we held for about 30 days. We broke above it. We saw a nice strong move up to 45.95, very, very close to 46. As we know, 46 to 48K is a high time frame level of macro resistance. Macro resistance, guys. It is one of the most significant levels of resistance on the chart for Bitcoin. A break above this level essentially sends Bitcoin to retest the prior highs. Not immediately, it's not going to happen overnight, but it facilitates that range of movement. It actually enables Bitcoin to enter that bull run phase from a structural perspective. Now, Bitcoin's been in a macro uptrend for a very long time, as we know, okay? We've been in a weekly uptrend since we broke above 26K, a daily uptrend above 20,000, a monthly uptrend above 32,000, and we enter a bull run phase or a macro monthly uptrend above that 48K range, guys. So a very key level of macro resistance we are looking at above that 48K. So it just goes to show, guys, how significant, sorry for inverting that, it goes to show you how significant this level of resistance is. And as we know, major resistances are where major moves occur. I would also like to add, as we approach major areas of resistance or support, areas that have significant macro consequences on the price action, we actually generally see less decision in the price action around these ranges, as there is a significantly larger amount of orders that need to be cleared for the price to move in any direction. Thus why we generally see a whole range of chop, volatility, and indecision on the short term as we approach major trigger levels. So that is why I've said at the start of the video, I wouldn't be surprised if we see a lot of indecision and trickier trading environments over the next few days approaching the ETF news. So at the moment, guys, we have seen the breakout looking good. This area is now a support. So this range high trigger has turned into simply an area of support as well as a bearish trigger point. What does that mean? It means two things. Number one, it is an area of support. Thus, while we remain above that level, we are in an uptrend. According to the structural measured move, we have a horizontal channel. We take the measured move from the low to the high. We apply it to the breakout. If you look at that, guys, and I didn't just make this up now, it takes us exactly, okay, I have to zoom in to get it perfect, literally exactly to 48K. The measured move from the range low to the range high takes us exactly to 48K. What does that mean? It means while we remain above this area of support, which is going to be this level, okay, the 44.2K, whatever it is, we are still expecting a move to 48,000. Simple as that. Nothing more to say. It is literally as simple as that, okay? The tricky part becomes is if we break below this level again, this would be marked as deviation from the range, and we could actually see the price action drop all the way back down to retest this 40K level. This would be very, very bad. Of course, we have numerous amounts of support between this range of support and, of course, this area of support below. But if we do deviate from the trend, we could see an equal and opposite correction or reaction toward that downside, as what that would suggest is the buyers failed to, even with the positive momentum, push the price higher and sellers stepped in significantly. If the sellers are able to break this downward resistance, it would tell us the sellers have significant control of the price action and will likely continue with that trend until an equal area of support is reached, an area of support strong enough such as that 40.5K range. So that would be very bad to see. Again, a retest and bounce, healthy, okay? A correction, continuation upwards, perfectly fine. A correction below, retest and rejection, very, very unhealthy. Watch out for that, guys. At the moment, I'm making no sudden decisions on Bitcoin while we are in this no man's land area, particularly as we are moving into this higher time frame level of resistance. More or less being patient and just observing the price action. Let's talk about the technical indicators. So overall, momentum still positive, although this trend line is now redundant. It has served its purpose. It is done. We don't care about it anymore. It is perfectly acceptable that we go ahead and delete that trend line on our chart. The one thing I am slightly concerned about is going to be the CVD. As you can see, the CVD broke upwards, but is significantly and rapidly deteriorating as the price action slightly corrects. This is an indication of exhaustion, preliminary exhaustion before we even meet resistance. Again, if we met this level of resistance and then broke down, that would be healthier than a failed retest and a breakdown, as it does go ahead and emphasizes the fact that even with the breakout, the bulls have significantly lost strength on this move, which is telling us the sellers are stepping in. So definitely keep your eyes on that, guys. We're going to take this video way over time, but I feel like it's been a good one and I feel like we need to keep going, so we'll just keep going with it. ETF news is a big one. There's a lot to do with the ETF news, and ETF news is coming up very soon. Like we said, there's three options really: approval, delay, and rejection. Those are the three options. There's only really three options, so let's talk about it. Delay is the easiest one, guys. If we see a delay, we might see some short-term turbulence. However, if there is a delay and the overarching narrative, is that the ETF will still be approved, then the price action is likely to have a null reaction, okay? Because it's not the fact that it's not the date that is causing the price action to move, it's the fact the ETF is going to be approved that is causing the price action to move. So if we get a delay in the ETF, the price action will have short-term volatility, okay, as people get emotional, but overarching narrative and all that remains the same. Bitcoin will likely continue its current trend. Easiest one to answer. If the ETFs get denied, Bitcoin will 110% correct. It will 110% correct, not by a percentage, but it will definitely correct, because this entire move from this range here, of course, have been bullish. Of course, the move would have likely occurred. If you think the only reason Bitcoin's gone up is because of the ETF narrative, you don't really understand macro price action, okay? We've been bullish on the macro well before the ETF news came out. The ETF news just kind of gave it a a bit of a shove. It kind of pushed it, kept that buying volume up, it loosened the price action, it suppressed the corrections, and it really exaggerated the moves upwards. But it wouldn't have, we wouldn't have not seen this move upwards if the ETF news wasn't there. But again, the ETF news kind of perpetuated that move, kind of gave it a little bit of a shove. So if we do see the ETF actually get denied, it is very logical to assume we will see a correction. However, support is support until it's not. So even if we do get a correction, we would see a correction into the 38 to 40k support level. Now, if we do lose this area of support, that will be horrendously bad for Bitcoin, as it would tell us we have had deviation from a major area of resistance. This level over here is now support. We would likely see a correction all the way down to 32,000. Very, very bad on a rejection. On an approval becomes very tricky. A lot of people are saying it's going to be a buy the rumor, sell the news event. A lot of people are saying Bitcoin isn't going to get approved. A lot of people are saying the price is just going to pump to like 50 grand. Now, there's a few scenarios I could go ahead and explain to you, and there's really going to be one example I'm going to give you. And the reason I'm going to give you this example is because, number one, we've never really seen an ETF approved for Bitcoin before. We've never heard of that in the space of cryptocurrency. It's a huge event. So we can't really say what's going to happen, because we've never seen this scenario play out before. But we can talk about the price from a structural perspective and go over prior historical data, and we have to trust that price action from a structural perspective, okay, moves in similar fashions over a period of time. So yes, the news could cause or trigger an explosive surge, but even if we get an explosive surge, it should still be a logical surge. It shouldn't be an irrational movement. It shouldn't take us to irrational levels. It would still take us within a logical range of price action, just a lot quicker than expected. So assuming going off that foundation, what we have seen in the past is a few things. And we're going to use a 4-year cycle again because, again, from a structural perspective, it just has held significance throughout the entirety of Bitcoin. It's not something you should trade off, but it is analytical data. If we take a look at the prior cycles, we have seen this scenario here. Now, what we saw in this scenario is we saw a huge wick toward the upside in the monthly, breaking above the trigger point, only then to see a correction toward the downside. That scenario is scenario number one. Scenario number two is that we see a immediate break and close above the dotted trend line on a monthly. And scenario number three is we see a rejection and failed attempt to break above that monthly dotted trend line before the monthly candle close. So scenario number one, guys, is going to be if Bitcoin gets a positive ETF news result, Bitcoin pumps past 48k and then fails to maintain the monthly candle close above 48k, we will likely see a scenario of which we played out in 2019, which would be a correction until only after April 2024, when we enter the bull run phase, that we break above that dotted trend line again. Scenario number two, guys, we see a close on the monthly candle above 48k. That would initiate a slightly early bull run and could actually destroy the 4-year cycle. We could see an early start to the bull run and thus a early end to the bull run. And scenario number three is that we do not retest the dotted trend line and we actually go ahead and break over the dotted trend line only after April 2024, replicating what we saw in 2016. What do I think is more likely? I cannot answer that for you. If I don't have a crystal ball. I'm not a psychic. I don't claim to know the future. Much of you guys look at my trading system and say, oh, this guy's got 8% win rate. Yeah, still not a psychic, guys. We still can't predict the future. So I'm not going to go ahead and say that. No one really knows. No one really knows what the ETF news is going to have effect on the market. No one really knows if they're going to delay it. No one really knows if they're going to approve it straight away. No one really knows. So the best thing to do is to look at the price action at a face value. Apply your trigger points, apply your strategies, plan your decisions, and just execute. And if you deem to yourself that you are unable to execute according to your strategies during a period of mass volatility or during a period of high impact news events, step away from the charts, observe, plan, and prepare for what happens next. That is how you do it, guys. Okay? Thanks for watching. Have a great and fantastic day. Make sure to check out the Crypto Academy courses. 10-unit course we created to teach you and give you a bit of a kickstart in your TA journey. Everything you need from the building blocks to market patterns to indicators to candlesticks in here to get a kickstart. Thanks for watching. See you guys on the next one. Cheers.